Good morning, guys. Welcome to this Thursday, June 5th. And it looks like we got a market holding on to the highs. Definitely a, uh, a nice little move up here a few days back. And they've been holding up here in this upper range, 59.80 to 90s, at least yesterday, yesterday's overnight, yesterday's day session, today's overnight. And we'll see if they can keep holding this. And it looks to me like we may have a shot at them taking a crack at taking out the 6,000s. But they are up against resistance, and that's going to be the key hurdle for them to clear if you want to be able to see a little bit higher prices. Now, we have news this morning. They got the Challenger job cut report at 7:30. Was about the same, a little bit lower, but in the like in 90,000s or something like that. International trade and jobless claims and productivity coming out at 8:30. And that's pretty much the bulk of the news. So 8:30 we get the bulk of the news. We get Nat gas report at 10:30, and that's about it. A few speakers in the afternoon at noon, 1:30. But we'll see if that turns into something. But 8:30 we have news, and then it's pretty much nothing. And of course, tomorrow morning we get the employment situation, and that's going to be big numbers. So it's going to be big reaction tomorrow. So everything I'm thinking could be in a holding pattern, waiting for that number to come out. So at this point, it looks to me like they're holding on. We see if I split out the next one. So this is it's Wednesday session. Tuesday, Monday session was kind of all over the place, but right smack in the range. Tuesday start trading higher. Yesterday we were holding up here, and today we are still holding, and we are up against resistance. So I'm looking for. I'm going to start off from the long side of the market, looking to retest these highs, see if they can get enough enough power to bust through it. But if they can't, there could be a nice short setting up here for rotation right back here to that 59.15. So that's our bread and butter trade. It's just in the bigger picture, it's just not happening fast enough. So I would be a little bit more, I would be a little bit cautious about I would be looking, how should I say it? I should be looking for a short trade up here, and expecting them to potentially to be able to bust through it. That's kind of the way I'm thinking about it. So starting off from the long side, looking to buy weakness, but not super aggressively. So buying weakness against this 59.75 level, maybe down to the 65s, and only these two levels. Because if they start backing off, I'm thinking that they failed against the upper area of resistance, and it's pretty much potentially moving back here to the 5900, 5950 in the tractor area. So I mean, we are trading still in the range. We are trading up against this upper area of resistance, and for us to trade it higher, maybe the news this morning could do that. I think it's a little bit on the weak end of that. Tomorrow's news definitely could bust us straight through it, or could run us right back down again. So, but if you're looking at this in the bigger picture, we are right up here against that upper edge, and if that edge holds, we're looking for rotation back here to that attractor at 59.15. So starting off with a slight bias to the upside, let's see if they can retest this high in the day session, potentially take it out. And if they can't, if they start taking out the 75s and 65s, I'm going to be looking for rotation back down to the 59.15s, which could be a pretty good move to the downside. So that's kind of the way I'm starting it. And if they take out the 59.95 to 6,000 here, then we have a potential shot at trading up all the way up here to test this 6,060s and then the 6,100s. So those are the next spots on the way up. We're going to find resistance. But it's a pretty good edge here. So and they've been holding that for a while now. So going to look for failure to take it out still. But just keeping the path open for a potential breakout to the upside. So looking for short setups against the 59.85, a little bit of caution, but 59.95 to 6,000 is upper area resistance, and of course the 6,005s, one level above the obvious, right? So they start taking out the highs, fail at the next level up, We've seen that a few times before, so it's not by any means outside the realm of possibilities. So two levels up, and if the both of them comes out, they start trading above 6,005. I'm going to stay on the long side and see how far they can take it. And if we get early weakness, I'm going to be looking at buying against the 75s and the 65s for rotations back up, but that's about it. If they start trading below the 65s, I'm thinking retracement back down into this lower area. Definitely taking off the long bias at that point. All right, so that's the ES to get started this morning. Let's see how that whole thing shakes out. It is like this climbing that wall of worries is what's going on right now, and it's you hear on the news all this doom and gloom stuff, all the potential things that can happen, and and bills may not get passed, and they're going to have a recession and all sorts of stuff, and then the market just keeps grinding higher. So that's the ES at least. Looking at the bond market is to the upside. They are traded higher in the overnight, and that's an interesting dynamic because now we're right back here into that area we talked about. This when I folded this distribution together, a little bit of a low volume area, a little bit of trough there to start filling out. So I'm going to be looking for them to trade up here towards this upper edge, 114, 15, 16 up to the 115s. And then pretty much trade back and forth in this range. That's kind of what I'm thinking. So, and if they start taking out this upper edge 115 to 115.16, then I think we have a pretty good shot at heading up to 117. That means yields comes down pretty good. If they start trading down below the 111, 15, 16, this lower edge comes back out of value into this lower range. I think we may, and yields obviously is going to be on their way up at that point, prices down, and we may see more weakness, and it's going to be a little bit of a headwind for the market. At this point, though, bonds are moving in the right direction for the stock market to at least continue what it's doing. So there we have it. So starting off on the long side, I'm going to buy weakness on the bonds. This point against 114s, 1325s down to that 1320s. The last one would be at 1314s. But I'm thinking if they trade below the 1325s, I'm taking off the long bias. Still looking to buy against the 1320s and the 1312 to 14s for rotations back up again. So that's kind of where we are on the bonds. Interesting that they're trading higher and yields coming down a bit. That's a good sign. NASDAQ, that's the one I have hopes for. That's the one that has been driving us higher, little engine. They're also up against this volume edge. I've not been able to quite bust through it. They had a pretty good move up here a couple of days ago and then kind of stalled. Yesterday was back and forth a bit, still kind of in a stall. Need to fold this guy back together like that. Like so. And now in the overnight, we extended a little bit in the overnight. So it looks like NASDAQ may have the best shot at taking out the edge. And if they do, they start trading above it. I think we may have a pretty good shot at look at it. We're pretty much right up here against this upper level. So the next area of resistance is going to really be up here. We have a ledge at 950, that ledge right there. We're going to have, say, some resistance coming in at 22,000, 22,080s. So we got a few areas of resistance to get to, but we are very, very close to all-time highs again. And if you think about where we were a couple of weeks or like a month and a half ago, things look pretty gnarly. And if you just look at the, let me see here. I have a daily chart I just track now, and then you can see here. And this is like just a flat out daily chart going back. So this is back in early April, right? This is the tariff craziness. And this is what happened since. It's like a slow grind to the upside. It's like a slow grind, almost all the way back up again. And you can definitely see that if you look at F1, if I stretch the F1 a little bit. But at this point, starting off from the long side, let's see if they can keep going. So looking to buy weakness against the 760s, 730s, down to the 700s. If they trade below 700, I'm going to take off the long bias and go back more range bound. If they start trading below the 660 and the 640s, these two support areas, I'm going to be looking for a retracement trade. And at this point, back here towards the 440s, 400 to 440s is where we have the next attractor on the downside. On the Nasdaq, though, we still had to get it back down. We had good support at 550, so that could be a reverse retest there first. The attractors down here at the 440s, but if they can't take out this upper edge, chances are they're going to at least retrace back to the 550s, maybe even down to that attractor at the 430s. So we'll see if it's basically up against resistance, and let's see if they can take it out or not. And remember, the default trade for us is failure to take out resistance, rotations back to the mean. And this is right up there. So the fact that they're grinding it higher just keeps me on the long side for now. But it's if they start failing, they could rotate back down again pretty quick. So you remember how it goes. They grind to the upside and the elevator down. So that's how we get started on the ES and Nasdaq. Nasdaq on the short side, looking for potential shorts against the 790s and the 830s. Above that, I think we may have a breakout on our hands. So looking for shorts against these two upper areas for rotations back down. Finally, oil and gold. Gold popping. That's usually not a great sign. It says a gold heading higher like that. That means that something may be up. And it's hard to say what, but the gold market had been doing pretty well in the last week or so. So they started off down here at the 33.20s. Nice move to the upside. They ran into this upper volume edge. Now they're taking that out and trading higher. So gold is signaling something is going on. Hard to say exactly what, but it's you'll find out later what they're trading on. But definitely someone is buying gold and hedging. Probably some financial uncertainty they may think may be coming. Could have to do with the geopolitical situation, with the Ukraine situation and the Iranian situation, where neither of them looks like they're going to materialize into a positive situation. So this looks like the war continues in Ukraine. Looks like the Iranians going to potentially reject. We'll see. That could be the reason they're moving higher like that. It's this like a geopolitical thing going on. But anyway, so we trade what we see, and at this point they're taking out that upper edge. Doesn't matter the reason why, we can trade it from the long side of the market. So looking to buy against the 34.16s, 34.07s for rotations back up. I think they trade below the 34.07s. I think we are heading back down and below this volume edge at that point. One level below the obvious 3400, 3398 to 3400s. This support area. That would be the last one I would look to buy against. But there's sometimes when you get, I keep saying that, sometimes when you get these moves in the overnight, a day session retraces them the whole thing and then some before they potentially trade back up again. And that's just the volatility of gold. So just had to take that with a grain of salt. So looking to buy weakness on gold, 34.16s, 34.08, 7 to 8. That last one would be the 33.98 to 3400s for rotations back up. And on the short side, not going to be very aggressive at all. I think if they are on the way up, the next short I would look for is up here against that 34.40s. That's where you can start looking for failure again. All right, so that's gold. And oil, finally. Oops. My mouth is starting to do this double click thing again. I'll get the new one. Anyway, so oil. Let me see. What's capital flow on oil? He's still pretty much trading in this range. It backed off a little bit from the high upper edge, kind of holding here in the middle of it. But you can see this volume edge on the side here. The distribution doesn't quite show it as well. But the actual volume traded definitely runs up to the 64s, down to the 60s. So between 60 and 64 is where the volume has been trading. Below 60, we still have a pretty good area of support all the way down to the 58, 75s. But I would say below the 60s, I would start looking at this on a short side and see if they can run how far they can run it. And above the 64s, let's see how far they can run it on the upside. In the meantime, right in between, I would just stay range bound. So just sell strength up to the 64s, buy weakness down to the 60s. So at this point, looking for short setups against the 63.20, 64, sorry, 63.20, 63.40, 63.90 to 64 here. I made this a little bit bigger on the top. There were two levels here, but I just kind of merged them together so you don't get too close to each other. So this is one big area of resistance. So that comes out, I would stay on the long side at that point, look for a breakout at that point, higher. And that would be if you get something like geopolitical, some sanctions against Putin, or they start bombing the Iranians, that could definitely be a short-term spike in oil prices. So there are plenty of reasons why oil could spike. The structural reasons are all to the downside. So I mean, the fact they're trading higher here is probably geopolitical tensions, and if they once that settles in, chances are the oil prices will be heading down. So because they're doing right now, the policies are all favorable to oil prices, to oil production and supply, which means that there's going to be more supply on the market. It's going to drive down prices. If demand comes up, could be some slowing in that, but it's overall they are hell bent of producing more oil and energy, and that's going to drive prices of oil to the downside. But right now we have a short-term pressure to the upside, and we'll trade that as such. So starting off range bound, looking to sell strength up to 64, looking to buy weakness initially down to 60, 62.80, 62.40, 62.20s for rotations back up, and then 3 levels up, 3 levels down. Let's see where they're going to go from there. All right, so that's oil range bound, gold from the long side of the market. Back to the ES, and that guy is kind of holding where we left it. So both ES and NASDAQ are up against a pretty good resistance. Let's see if they can take it out. If not, if they fail, there's going to be some sort of retracement starting off, and we'll see when that happens. Chances are, I think, that since we have employment situation tomorrow, market may be kind of holding in a range, in a reasonably tight range today, and waiting for that news, and then we'll see if they're going to either retrace hard or break through. But that doesn't necessarily need to happen. Sometimes you get a pretty good move ahead of news as well. So we'll see. But we'll trade what we see. And on the ES, watch the two levels, 59.75 and 65. Those are key. If they come out, we are heading lower. And on the way up, looking for shorts against that 59.95 to 6,000. That would be a pretty good short setup up there, or could be, for rotations back down. All right, we'll wrap it there, guys. We have news in a few minutes, like 7 minutes, and that's international trade, jobless claims, and productivity and costs. So good trading, guys. It is Thursday, and we got maybe a little bit of action on hand. We'll see. All right, we'll see you back at 11:30 for the next update. Later.